Friends, the market has given us a very rare combination of signals today. Both Bitcoin and Ethereum funding rates are negative, the DXY has broken below a key support, and geopolitical risks have suddenly cooled down. What does this combination of three signals mean? An upcoming short squeeze? Or another market trap? In today's video, I'll take you deep into the core contradictions of current macro liquidity and the crypto market, and show you the opportunities and risks I see. Buckle up, let's go. I've observed that the core contradiction in the market today is very clear. On one hand, the funding rates for both Bitcoin and Ethereum have turned negative, meaning those who are short are paying those who are long. This is typically a signal of a short-term bottom. On the other hand, the DXY has broken below 99.5, gold is soaring, yet oil is plummeting. This indicates a fundamental shift in market logic, moving from fears of war and inflation to expectations of peace and rate cuts. What kind of opportunities are hidden behind this contradiction? Let's continue. Tone, calm, powerful. The essence of trading lies in reading the shift in power between bulls and bears. Right now, the balance of power is changing subtly. Understand this change, and you understand the core of the current market. Let's start with the most critical macro data. First, the market's expectation for a rate cut in June is almost zero, at just 1.5%, meaning the Fed won't act anytime soon. But what's really interesting is the dollar index, which has broken below the important psychological level of 99.5. Let me tell you, a weaker dollar is a major positive for all risk assets, especially the cryptocurrencies we care about. How strong is this signal? We'll analyze it in detail later. Next, let's look at liquidity indicators. The size of the on-RRP is falling, which means there's a bit more money in the market. However, bank reserves are still below $3 trillion, indicating that overall liquidity is still tight. Nevertheless, the spread between 2-year and 10-year treasuries is positive, which is typically a sign of an economic soft landing. So my judgment is that the current liquidity situation is stable, not flush, but not tightening further either, which provides breathing room for risk assets. Finally, let's check commodities and the crypto market. Gold is skyrocketing, oil is plummeting. This 1-2 punch is very rare, and we'll discuss it later. In the crypto market, both Bitcoin and Ethereum funding rates are negative, which is the most important signal today. I've checked historical data, and the probability of a short squeeze occurring in the short term after this happens is very high. Meanwhile, Bitcoin's 30-day moving average is still rising, the trend hasn't changed. So, what do these signals specifically mean? Overall, I believe the current liquidity situation is stable but tight. The decline in on RRP has released some liquidity, but the low level of bank reserves limits the overall degree of easing. Therefore, looking at liquidity alone, there won't be a major market rally. But don't forget, we have a more important variable, the dollar. The weakening dollar is becoming the core driver pushing risk assets higher. We'll elaborate on this on the next page. The essence of trading lies in reading the shift in power between bulls and bears. Right now, the balance of power is changing subtly. Understanding this change is key to grasping the core of the current market dynamics. Next, I'll break down the 3 critical signals to watch today, which stem from the crypto market, forex market, and geopolitical landscape. All point to a potential market reversal. I'll analyze each signal's strength and impact to help you navigate the next market moves. Let's start with the most impactful one. The first, and strongest, signal is that the funding rates for both Bitcoin and Ethereum are negative at the same time. Guess what? This means short sellers are paying interest to long investors every day. I've backtested historical data, and when this signal appears, the probability of a strong short squeeze rally in the next few days exceeds 70%. Therefore, I believe a prime short squeeze window has opened, especially for Ethereum, which could lead a market rebound if it holds above $1,700. The second signal comes from the forex market. The dollar index has broken below the important support level of 99.5. Simply put, the dollar is becoming less valuable. This is a huge positive for all dollar-denominated risk assets, like stocks, gold, and cryptocurrencies, because holding other assets becomes more attractive. I judge that if the dollar can stabilize below this level, capital will continue to flow into the crypto market, pushing prices higher. Signal 3 is geopolitical, the US-Iran peace deal. This directly caused oil prices to crash as supply fears eased. Lower oil prices reduce inflation expectations, lessening Fed rate hike fears. This leads to a weaker dollar, boosting gold and crypto as safe haven and alternative assets. Alright, after analyzing all the signals, let's summarize and see what might happen in the future. I've categorized it into 3 scenarios, corresponding to different probabilities and outcomes. This can help us prepare in advance, so we know what to do no matter which way the market goes. I believe scenario A, with a probability of approximately 55%, is the most likely outcome, a confirmed short squeeze. The core triggers are clear. Bitcoin must break above the $66,000 level, Ethereum needs to surpass $1,750, and funding rates should remain negative. If these conditions are met, we can expect Bitcoin to quickly rally to the $68,000 to $70,000 range, while Ethereum will follow suit, moving toward $1,800. This is the trend I am currently anticipating most strongly. The second scenario, with a 30% probability, is that the market enters a consolidation phase before the FOMC meeting. If the forces of bulls and bears are balanced and the dollar stops falling, the market will likely choose to wait and see. Bitcoin will fluctuate between $64,000 and $66,000, while Ethereum hovers between $1,700 and $1,750. In this case, the best strategy is to wait patiently and avoid blind operations. Finally, there's a low probability risk scenario, with a 15% chance. If the upcoming FOMC meeting sends an unexpectedly hawkish signal, such as hinting at more rate hikes in the future, the market may panic again. The dollar will rebound, and risk assets will be sold off. In this case, Bitcoin could fall back to $62,000, and Ethereum may test the support at $1,600. We need to be vigilant about this black swan event. There's another very unusual signal combination in the market today that's worth pondering. Look, gold is up, oil is down, and the dollar is also down. This is completely different from our usual understanding of a safe haven. I believe the logic behind this is that the market is trading the relief of rate hike fears. Inflation expectations are coming down, so gold, as an inflation hedge, naturally rises, while risk appetite increases due to rate cut expectations. This is a very healthy signal for a rally. Tone, calm, powerful. The essence of trading lies in reading the shift in power between bulls and bears. Right now, the balance of power is changing subtly. Understand this change, and you understand the core of the current market. Alright, let's wrap it up in one sentence. The core drivers of the current market are the double short squeeze signal, a weaker dollar, and geopolitical de-escalation. I believe the most likely path is that the market will trigger a short squeeze rally before the FOMC meeting, and then enter consolidation after the meeting. So, in the next few days, I will focus on whether Bitcoin can break through $66,000 and whether Ethereum can hold above $1,750. Finally, I've prepared a list of key indicators to watch closely for the next 24 to 48 hours. Bitcoin's $66,000 is the bull-bear dividing line. A break means a short squeeze. The FOMC meeting statement is the anchor. Ethereum's funding rate is the weather vane. The DXY's 99.5 is the water level. Gold's $4,350 is the thermometer for inflation expectations. These indicators are our navigation map for the next steps. Let me distill the 3 most core points for you. First, keep an eye on Bitcoin at $66,000. Go long boldly if it breaks. Second, pay attention to next Monday's FOMC meeting. The new chair's speech is crucial. Third, see if Ethereum can hold $1,750. If it can, it's likely to be the vanguard of the rebound. These 3 points are the key to our market direction judgment.